opening remarks. Some of that is coming from the weaker growth prospects in the US. Some of it is coming from the increased uncertainty, and it's leading to a reassessment of the global demand for dollar assets. When we step back, we also have to realize we're coming from a position where over the last few years, there have been tremendous capital inflows into US markets, in particular risk markets. And that's something that, of course, my colleague Tobias Adrian will talk about in the GFSR press conference. So we are seeing some adjustment, some correction. The markets are handling it. We don't see signs of stress, even in currency markets. Now, the interesting development is, what does it mean for emerging markets? And you're right to point out that in the past, when dollar would strengthen, that would not necessarily be good news for emerging markets because they have dollar-denominated debts, so that increases their liabilities and the pressure on them to service those debts, and that can lead to some tightening of financial conditions. So we are not seeing that right now, and so that's a plus. The flip side of this is, of course, the appreciation of some of these emerging markets currencies means that they are also losing a little bit on the competitiveness side. So there is maybe something that is a bit easier on the financial conditions, something that is not as easy on the trade side. Finally, this is an environment of enormous uncertainty, increased volatility, and that, I think, is something that will dominate for many of the emerging markets. So when we're looking at our assessment, we are actually downgrading the emerging market economies for 2025 and 2026. Most of them, some of them may, as I mentioned, benefit, but overall as a group they're downgraded, because they're also very plugged into the global supply chains. The uncertainty is leading to a pause in investment and activity, and they're going to suffer from the decline in demand for their products coming from the tariffs.
Okay, I'm going to go with the gentleman here with the glasses.
Thank you. Andrew from the Austrian Daily Standard. I just have one question. Could you elaborate a little bit on what will happen with trade flows in your models? I saw that in the basic assumption that the exports from the US are breaking in quite heavily, but not that much from China. Why is this so? And do I understand it right that this basic model does not yet integrate the additional hikes after basically April 9, so above 100% on import tariffs by the US? Thanks.
So we are seeing a large impact on global trade coming from the tariffs. And that's going to be the case under any combination of tariffs where the effective tariff rates remains very elevated. And the reason why, when we looked at the different scenarios that I mentioned, whether it's a reference scenario or our April 9 scenario, which includes lower tariffs on many countries, but sharply increased tariffs between the US and China, the overall impact on the global economy is not very different because the effective tariff rate is, if anything, even higher under that pause. So global trade is going to be significantly affected. The particular configuration of trade, which bilateral trade flows are going to be affected versus others, that will depend on the final landscape in terms of tariffs. So we can anticipate that there will be much lower bilateral trade under either the reference scenario or the April 9 between the US and China. And that is weighing down on global trade growth. This is weighing down on global trade generally.
Okay, I'm going to turn here to the center. I'm going to go to the first row. I'm going to go with the lady with the yellow bottle.
Thank you. Gurpreet Narwan, Sky News. You've downgraded the UK's growth forecasts quite sharply and given a range of explanations from higher tariff barriers to more domestic issues like cost of living pressures. Out of those, so the global challenges versus the domestic challenges, which one is weighing more heavily on the UK's growth forecasts?
Okay, we're going to open the round of UK questions. So if you have questions on the UK, raise your hand and I will pass the mic to you. I see Shu there. Yeah.
Hi, Sue Chan from The Telegraph. In a world where everyone is warning about the impact of tariffs on US inflation and how much it will raise US prices, why do you have the UK with the highest inflation rate in the G7 this year And do you believe tariffs will be inflationary or disinflationary for the UK?
Okay, Joe here in the first row.
Yeah, thank you very much. So, Joel Hills from ITV News. Obviously, it's impacting, the tariffs are impacting the UK, they're impacting most countries. I just wonder this, President Trump did say that there would be some disruption. He suggested it would be sort of temporary. Is it possible that President Trump is actually a genius? That he knows something you do not?
And I think we have a last question on the UK, and this is going to be the last question in the UK, there on the back of the room.
Yeah, Alex Brummer from the Daily Mail. The UK inflation forecast is, much higher than we expected it to be, 0.7% higher. Is that going to impact on lowering interest rates in the UK, and does that affect the growth rate, which seems to be rather optimistic compared with some of the other European countries?
Okay, we are going to be done with the UK questions, and then we will move along. So, Pierre-Olivier.
Thank you. So many questions. Let me address them as best I can. So first, on the revision for growth in the UK and inflation. So the tariffs are playing a role, as they are in most countries, and uncertainty is also playing a role, as it is in all countries. And it's weighing down on growth in the UK. But there are some UK-specific factors, and I would say that in terms of the 0.5 percentage point downward revision that we're seeing for the UK, the domestic factors are probably the biggest ones. And in particular, there is a lower carryover from weaker growth in the second half of last year. There is also some tightening of financial conditions as interest rates have risen, longer-term interest rates. On inflation, the revision in inflation in the UK is coming from, again, from domestic factors, and in particular, some change in regulated energy prices. So that's expected to be temporary, but it's also very UK-specific. The effect of the tariffs on countries like the UK, like it is on the EU or China, is like a negative demand shock. It's weakening activity, but it's also lowering price pressures, not increasing them. Now, what is the impact of the tariffs in the medium and long term? And not just what's going to happen this year or next, but what's going to happen longer term. Our assessment is that it's going to be negative. We have a box in our report that looks at the long-term impact of the tariffs if they're maintained, and it is negative for all regions, just like the short-term impact. So we're seeing a negative impact in the short term, in the medium term, in the long term. Again, there are nuances. Some countries might benefit depending on the particular configuration of tariffs, might benefit from some trade diversion, but the broad picture is it's negative for the outlook. Now, and I will end with that, our forecast for 2025 is slightly higher than OBR's forecast. Some of this has to do with some of the underlying monetary policy assumptions. For the UK, the bank, our assumptions for this year is that there are going to be 4 cuts through the year. 1 cut already happened. We expect 3 more.
Thank you, Pierre-Olivier. I'm not going to forget about the people that are on WebEx, and I'm going to pass a question there. I see Anton from TASS. Please go ahead.
Good morning. Thank you for doing this. Anton Chudakov, the TASS News Agency. Given the projected slowdown of Russia's GDP growth from 4.1 in 2024 to 1.5 in 2025, what are the primary factors driving this sharp decline, and how sustainable is Russia's growth model going forward? Thank you.
Go ahead.
Petya, would you like to answer?
Sure. So we are indeed expecting a slowdown in growth to 1.5 this year. And this, to a large extent, is kind of the natural slowing of the economy after growing quite robustly in previous years, and also as a result of policy tightening that we've seen both on the fiscal as well as on the monetary policy side. It is also due to the lower oil prices that have come about as a result of the, as a response to the to the round of tariffs, as well as the uncertainty about global growth. So all these factors are behind that lower growth number, although I should point out that it is actually a slight upward revision relative to what we had back in January. And the reason for that is that, again, we actually had seen upward surprises in 2024, which kind of carried into 2025. When it comes to the medium-term growth outlook, we do expect that to be relatively weak. We have penciled in growth number of about 1.2, which is down from 1.7, which is what we had before the start of the war.
Okay, let's continue. I'm gonna go again in the center, and then I'm gonna go to that side. The lady with the glasses there.
Hi, Maria Rosa Villalobos from El Comercio, Peru. In Latin America, we received almost every country 10%, so I want to know about the impact of the tariffs in Latin America, and if the impact is going to be limited versus other regions, and when we are going to start to feel in this impact. Thank you.
And before we answer the question, are there any questions on Mexico, Brazil, Argentina? Okay, Argentina friends, go ahead.
Hello, Patricia Valli from El Cronista newspaper. You've kept the 5.5 growth projection that was decided in the latest program that Argentina signed with the IMF. I would like to know why you're not seeing so much impact yet about of this general context.
Okay, we can go ahead first with the Latin America overview, and then we can go to Argentina.
I'll just say something briefly and then ask my colleague Petia to come in. So for Latin America as a whole, we're seeing activity that is largely driven by consumption on the back of resilient labor markets, while investment remains somewhat sluggish. And the slowdown in our projection reflects the impact of tariffs and the global growth slowdown, of course, which is also affecting countries in the region, policy uncertainty, and the withdrawal of fiscal stimulus and in some countries, monetary policy tightening.
Yeah, I don't have a lot to add, just to say that the disinflation process has also slowed a bit. And this is also makes the policy trade-offs a bit more complicated with growth slowing down, and at the same time, having still challenges on the inflation side.
Okay, so we're gonna move on. I'm gonna ask the gentleman in the first row there because. Oh, sorry, I forget about Argentina. Please go ahead.
We cannot forget about Argentina. So the growth forecast for this year, you're right. We still have the upgrade of 0.5, and this is related to just the positive surprises that we had seen in spite of a very strong fiscal adjustment. The recovery in confidence, I think, has definitely played a role in driving us to have this forecast. That said, there are a number of risks related to tighter financial conditions, commodity prices, and a lot of others, which is true for many, if not most, other countries.
Okay, so now we can move on. I'm going to go, gentleman in the first row.
Thank you. My name is Francis Into. I write for the Ghanaian News Agency. In the October 2024 outlook, you saw a stable but slow growth for Africa. What's new now, and what can initiatives like the African Continental Free Trade Area do for African economies amidst these trade tensions?
And before we answer, I think, Kami, you can.
Hi, good morning. Kemi Oshikoya with the Africa Bazaar magazine. One of the things that you mentioned in your report is the demographic shift and the rise in the silver economic. Africa, on the other hand, has the reverse of that. So what is your recommendation in the short and medium term on how to deal with some of these challenges pertaining to tariff, monetary policy, and currency exchange? Thank you.
Okay.
Thank you. So I'll just say one word about the outlook in sub-Saharan Africa, and then I will ask my colleague Denise to come in and add more color and answer also the question on the demographic trends. So regional growth in sub-Saharan Africa improved significantly last year to 4%, and it will ease in 2025. And this is in line with a softer global outlook. And so we are seeing the same forces at play in the region as we are seeing more globally, and a downturn in the downward revision in our projection that is of the similar magnitude at about 0.4 percentage point. Denise.
Thank you for the question. So on the demographic shifts, our chapter 2 basically points out that countries' age structures are evolving at different rates. As you pointed out as well, we have most Western economies, some Asian economies that are aging fast and in a healthy way, some of them, and then we have many sub-Saharan African countries that have a very young population. And what the chapter shows is actually there are important medium-term consequences of that, both for growth as well as external balances of countries. In Africa's case, basically what we would see is a demographic dividend coming from having a young population. And the question then becomes how best to leverage that, how best to use that and channel it into growth. And the answer there, first and foremost, depends on the structural reforms, the investment that's necessary on healthcare, on education, on human capital more generally, and also international cooperation, because our chapter 3 looks at more carefully onto migration flows. And again, there we see that migration policy shifts in destination countries has spillovers for other countries, and this is especially true for emerging market economies and lower income economies. So again, international cooperation there, making sure that the growth dividends are utilized in the best way. This is what we delve into in the chapter.
Okay, I'm gonna go to the gentleman with you. Yeah. Raise your hand. Yeah, you. No, I'm going back. Then I'll go. There you go.
Okay, thank you. Reporter from China Daily, Huanxin Zhao. Yeah, I have a question about China's growth. In your World Economic Outlook, it says China's growth forecast has been cut to 4% for this year, which is a 0.6 percentage drop from earlier projection. But China's National Bureau of Statistics a couple of days ago says predicted China's growth, GDP growth in the first quarter was 5.4%. So my question is, how do you see the disparity in the forecast? Is China more optimistic than you are? Thank you.
Should I go?
Yeah, go.
Thank you. So yes, we are revising our growth projections for China down by 0.6 percentage points, as you've noted. I should flag that this number does not incorporate the latest release for Q1 that came after we close our round of projections. So this is not reflected there, and we will have to see how it affects our projections when we have our next round of WEO updates. But let me give you a little bit of perspective on the rationale behind our revision for China. The increase in tariffs, especially since China is one of the countries that is facing the most elevated tariffs right now, is going to have a very significant impact in our projections on the Chinese economy. In fact, when we do a decomposition, which I showed during my opening remarks, the impact of the tariffs on the Chinese economy would be a negative 1.3 percentage point on a revision on growth. So why do we only have 0.6? Well, because there are other factors that are helping to support Chinese growth in 2025 and 2026, one of which is quite important, is the fiscal support that's been announced since the beginning of the year. And that is adding up something of the amount of 0.5 percentage point. So the impact of the current trade tensions is very significant. It's partly offset. We expect it to remain quite significant also in 2026, when we have also a downward revision by about 0.5 percentage point. The other side of this, where we're seeing the impact of the tariffs, is on inflation, which is revised down. Our headline inflation projection for 2025 is actually at 0. So it's down from 0.8% to 0. So China is facing stronger deflationary forces as a result of these trade tensions.
Okay, I'm going to move to this side. The gentleman with the glasses here.
Mohammed Bidewi, the New Arab newspaper based in Qatar. What impact the oil prices will have in exporting and importing countries in the Middle East? Thank you.
Go ahead.
So we have seen oil prices declining since our last projections, and the decline in oil prices in our interpretation is coming mostly from weaker global demand. So it's the weakening of global activity that is driving the decline in prices. There's been some increase in supply coming from OPEC plus countries, but broadly speaking, the decline is mostly coming from weaker demand. So that is going to play out in ways you sort of would expect. The commodity exporters are going to face lower export revenues from the decline in oil prices. That's going to weigh on their fiscal outlook, on their growth. For those countries that are oil importers, it's going to lower inflation pressures, because that lower oil prices is going to feed into lower headline inflation. It's going to also provide some modest support to economic activity there. Denise, anything to add on oil prices or Petya?
No, I don't.
Okay.
Okay, so we're going to move to the center. I'm going to get the gentleman with the white shirt there.
Jeremy Warner, Daily Telegraph. I'm not going to ask another question about the UK. You'll be pleased to know. Over the last week, we've seen a number of attacks by the White House on the independence of the Federal Reserve. How destabilizing do you think this might be for financial markets?
So central banks are facing a delicate moment. As I've explained, in many countries, the impact of the tariff is going to be to increase recessionary forces and is going to lower price pressures. And that will help central banks cut interest rates faster and provide some support to their economy. But in other countries, and in our projections, the US is in that category, the tariffs are going to increase price pressures. Price pressures in the US are increasing for other reasons as well. Service prices have been inflation of service prices has been quite strong, and that is something that we're seeing already, but the tariffs are likely to increase price pressures. We're projecting inflation to remain at 3% in the US this year, same level as last year, headline inflation. So in that context, if you also think about where we're coming from a period of very elevated inflation. We're just coming off the cost of living crisis, a surge in inflation rates to double digits that we haven't seen in more than a generation. So the critical thing is to make sure that inflation expectations remain anchored, that everyone remains convinced that central banks will do what is necessary to bring inflation back to central bank targets in an orderly manner. And central banks have instruments to do this. They have their interest rate instruments. They have various instruments of monetary policy. But one critical aspect of what they do is coming from their credibility. So central banks need to remain credible, and part of that credibility is built upon their central bank independence. And so from that perspective, it's very important to preserve that.
Okay, we're going to have time for 2 questions. One of them is going back to WebEx. I see where. Please, come in.
Yes, we are good with Thai Media Group, and I have a question. You mentioned that the global economic system is being reset, and I'm not sure if one of the early signs in the financial markets, as we see that the market's moving from American exceptionalism to the sort of sell the U.S. narrative. So could you assess its implication for the financial market and the world economy as a whole?
Yeah, well, we've seen some volatility in the markets, of course, whenever there is going to be potentially significant change in the economic structure of the global economy. I think we're bound to see some reassessment, and investors are going to try to figure out what's happening, and that's going to inject volatility, and we're seeing some of that. The good news is a lot of that volatility that we've seen in the last few weeks has not led to significant market dislocations or market stress to levels that would, for instance, have necessitated interventions by central banks around the world. So whether you're looking at equity markets, whether you're looking at bond markets, whether you're looking at currency markets, what we're seeing is a reassessment of the world we are in now. And that means that there is a reassessment of valuations of risk assets, of different currencies, but that is happening in an orderly manner. So from that perspective, we are seeing a system that is quite resilient, that remains resilient, but of course we're watching carefully, and there's been some tightening of financial conditions, and that's something to be looking out for. We want to make sure that it doesn't get to a level where the stress in the financial system would become too extreme.
Okay. The lady here in the first row has been waiting patiently. Please go ahead.
Thank you, Jose. Marlene Shong with Xinhua News Agency. I wanted to ask about the trading tensions impact on low-income countries. You mentioned there are like downgrading for emerging markets, but how about like those small countries who have lower income as a group? Have you assessed the particular impact on them in this ongoing trade tension? Thank you.
Well, thanks. So for low-income countries as a group, we are also seeing a downgrade, which we report in our report of 0.4 percentage points. We're expecting growth of 4.2% in 2025. So the 0.4 is very similar to what we're seeing at the aggregate level, 0.5. So from that perspective, it looks quite the same. However, there are also a lot of differences across countries. And when we look more carefully, you might see some vulnerable countries, especially in sub-Saharan Africa, but elsewhere as well, who could face very challenging conditions as a result of the tariffs in an environment in which many of the countries, low-income countries, have been facing a funding squeeze for a number of years now. Private capital flows to this region have been drying up or have been coming on very expensive terms. We're seeing a drying up also of some official aid flows. So some of these countries have very limited fiscal space. They're in a situation where the situation could become more challenging. Now, on the flip side, the fact that we're seeing commodity prices coming down for many commodities will help some of them. The commodity importers in that group will hurt the ones who are commodity exporters. And there are a number of countries among the low-income group that are commodity exporters. So that's adding some additional pressure on them.
I'm going to make an exception and accept just one last question. So I'm going to go with the gentleman on the white shirt there. He's been waiting patiently too. And don't get frustrated. There's going to be many opportunities for you to ask questions.
Thank you, Jose. Awan Lucas from IFP. I had a quick question about Spain, because that's the only country amongst advanced economy where you have an upward revision. It's going to be way better than the Eurozone and even better than other advanced economies. What are the underlying reasons for that? And you formally talked mostly about tourism, but is there any other thing that might be pointed out? Thank you.
So yes, indeed, Spain is doing better than its peers. Petya, would you like to talk about it?
Sure. Indeed, we are actually having an upgrade for Spain this year, which is a rare occurrence in the many downgrades that we've had for other countries. This is partly because the Spanish economy just had such strong momentum in 2024 coming into 2025. And part of that was due to the very strong services exports as well as the very strong labor accumulation, part of that related to immigration. But all of that being said, Spain is still being affected indirectly and directly by the tariffs and the uncertainty associated with that. It's just that, as I said, that underlying strength is kind of having a bigger impact in the near term. But then again, in 2026, we do project kind of slowing of growth to about 1.8.
Okay, and on that point, I want to thank you, everyone, on behalf of Pierre-Olivier, Petia, Denise, the research department, the communications department. Some reminders. Next press briefing is going to happen in this same room, Global Financial Stability Report. Please stay tuned. Tomorrow, you have the Fiscal Monitor, and then later on the week, you have the Managing Director's press briefing, and also all the regional press briefings that we've been talking about. Thank you very much for your time. If you have questions, comments, send them my way to media@imf.org, and hopefully you have a great week. I'm sure it's going to be busy.